All right, Rick, let's talk about some of the donor aspects. And we're hearing from some big billionaires, one being Elon Musk, saying that he is pledging to donate at least $45 million per month to help garner some support and elect Trump in November.
Tesla shares had a huge rebound over the last month, enough to give them a favorable outlook for the year and support the argument that it has even merited a return to the Mag 7. Examining more closely what has changed on the fundamental level, dear Josa. For today's tech check, Dira, Kelly, enormous increase in stock value. But what about the fundamentals? Not much has changed about them. In actuality, it is anticipated that the current quarter's sales and earnings growth will lag significantly behind that of the other 6 megacaps. Despite being in the magnificent 7 of the 7, Tesla is the only company predicted to have a decline in revenue growth this quarter. The outlook for earnings growth is considerably worse, with a 34% decline anticipated. Tesla's stock has seen a tremendous surge in value over the last month. Tesla's stock has rebounded and is now up for the year. More on that soon. However, the bears always surface as the stock of Tesla rises, claiming that the company's price is irrational. For almost 15 years, they have been making this claim. Before we go into the specifics, please show your support by liking this video and subscribing to Tesla Stock News. Things are about to get exciting for Tesla. Let's get started. Tesla's stock surged 27% last week, wiping out all 2024 losses. Our next speaker, though, believes that with more competition, Tesla will have comparable difficulties the next year. Let's listen to Tony Saccogi, senior research analyst at Bernstein. With a target price of $120 per share, Tony believes Tesla is underperforming. You heard correctly. Each share is worth $120. To put it in perspective, Tesla's stock is now worth over twice as much. For almost 10 years, Tony has covered Tesla. At the beginning of 2017, the split-adjusted price of Tesla's shares was $16 per share. Some were loading up as the stock doubled by October 2019, but Tony advised holding as it was not moving. He kept recommending holding. Around this same period, this YouTube channel began to allude to Tesla's potential. After the stock jumped, Tony advised everyone to sell. Tony thinks Tesla is only worth half what it is now. To put that in perspective, Tony recommended owning Tesla shares in July 2020, when it was trading at $96 per share. Since then, Tesla's business has grown significantly. Does Tony genuinely think that during the past 3 years, the company's worth hasn't increased? Tony has made incorrect predictions about Tesla, recommending holding when investors ought to have been buying and selling over the past 3 or more years. Even when the stock was about $100 per share, he has never once suggested purchasing it. Tony, good morning. With a 25% increase last week and a roughly 40% increase over the past 2 weeks, Tesla has had a fantastic run. It's riding the wave of better-than-expected performance, but it's selling at 125 times earnings, with deliveries down 9% last quarter and 5% this quarter. Improvements are anticipated, and a robo-taxi event in early August is anticipated to generate excitement. I have a question for you viewers. Do you believe Tony views Tesla as merely a manufacturer of automobiles? He focuses on car deliveries in his remarks. Does he view Tesla as only an automobile manufacturer, or will he bring up the company's robo-taxi potential, AI developments, or the upcoming humanoid robots? Tony describes the stock jump as mimetic and argues that the value is out of touch with reality in order to justify his $120 per share target. This is an easy way to get away. He accuses retail investors of purchasing the stock without sound financial judgment, even though they have lost out on returns of 10 to 15 times since covering it. However, if you continue to make the same claim for almost 10 years and the market doesn't agree, you might simply be mistaken. How long, 6 months, a year perhaps, should we wait before stating that Tony might not comprehend Tesla's valuation? But it's time to think again after 10 years. Certain stocks, such as the SPAC mania, do deviate from reality, but they typically return to it swiftly. Since then, many of those stocks have fallen between 92 and 99%. Tony argues that if T Tony ignores the innumerable videos of individuals driving hands-free for extended periods of time and rejects Tesla's advancements in full self-driving FSD. He contends that the software's capabilities are irrelevant because Tesla isn't lawfully operating autonomous vehicles anyplace. However, Tesla could probably juffence its cars to drive itself in constrained spaces, such as specific streets in San Francisco, if they so desired. In order to ensure the safest possible deployment, they haven't yet sought regulatory approval. The true problem is that Tony's analysis fails to take into consideration the apparent advancements and possibilities of Tesla's autonomous technology. He ignores the wider picture in favor of sticking to his spreadsheets. Following regulatory approval, Tony may finally see the light at the end of the tunnel. However, he isn't taking advantage of the noteworthy developments that Tesla is making in his direct line of sight until then. Tony still maintains that Tesla won't be very good at fully autonomous driving. According to him, the business won't become exclusive enough to support its current high worth. However, see how Tony's remarks change now that he can easily incorporate Tesla into his spreadsheet. Let's continue to concentrate on CNBC's coverage and Tesla's stock rise. The stock may be able to regain its place in the Magnificent Seven thanks to this rise, which is noteworthy enough to turn the year around. The fundamentals of Tesla haven't altered significantly in spite of the massive increase in the stock price. Indeed, it is anticipated that the current quarter's sales and earnings growth will fall far short of that of the other 6 megacaps. Of the Magnificent Seven, Tesla is the only one whose sales growth is predicted to slow this quarter. Earnings growth is predicted to drop by 34%. However, Tesla shares are rarely driven by fundamentals. It all comes down to momentum and the potential for technological advancements, which Musk alone can provide. The stakes are high for Tesla to outline its AI strategy, particularly NVIDIA's role when it reports on July 23rd, now that momentum appears to be back on the company's side. Over the past few years, Tesla has purchased and installed tens of thousands of NVIDIA GPUs in order to create a potent AI infrastructure. Musk has acknowledged that he had transferred some of those GPUs from Tesla to his private businesses, X and xAI. The required infrastructure wasn't ready, therefore Tesla couldn't use the GPUs right away, despite some false rumors. Musk clarified that as Tesla's facilities for these GPUs were still being built, the GPUs were given to xAI, who could start using them right away while Tesla secured the next slot. On July 4th, Musk provided an update, stating that the development of Tesla's supercomputer cluster at Gigafactory was nearing completion. This indicates that because the required infrastructure was still being constructed, Tesla was unable to use the GPUs earlier. Now, to change the subject, we're keeping an eye on shares of tsla this morning. They are currently moving, as the EV manufacturer is taking a break following Monday's 9th consecutive day of advances. The stock's current winning streak has eliminated its losses for the year. Since falling to their most recent low in late April, shares have increased by more than 75%. During the results call, Musk will undoubtedly highlight Tesla's status as an AI company rather than merely an automaker. Updates on the AI strategy and GPU deployment will be sought after by investors. Wedbush believes that the robotaxi event on August 8th, which is just 1 month away, will pave the way for fully autonomous and self-driving cars in the future. It's important to note how well this fits Tony's skepticism. Wedbush actually discusses clearing the path to autonomy, but Tony is unable to perceive it. There is a clear distinction between Tesla stock bulls and bears. While bulls view Tesla as an AI firm, bears view it as an automaker. Musk and his group must demonstrate Tesla's AI capabilities and their use of all those GPUs. You make a really good point, Dara. Tony seems to completely overlook the fact that Tesla's future depends on its capacity to persuade the market of its technology innovations and AI powers. The coming months will be crucial for Tesla's story and stock price as usual. Tony keeps saying that Tesla won't succeed in fully autonomous driving, ignoring the important breakthroughs that are happening right in front of him. According to him, the business won't become exclusive enough to support its current high worth. However, keep an eye on Tony's remarks now that he has the ability to.